Thanks so much for joining me on the Slice of Healthcare podcast. How are you today?
Thanks, Jared. Doing great. Thanks for having me.
Absolutely. I'm excited for us to chat. I believe you are our first, if I put you in a bucket, right, investor that has come on to the podcast. Definitely something we want to do more of. It's been a crazy last year, and a ton of companies raised a lot of money in the digital health space and anything really healthcare related, right? And so I definitely want to have you hopefully on more than once, and some other investors in the space to kind of talk about your thoughts. So I'd love if you could give the audience a quick background on you, and then we'll dive into a few other topics.
Sounds great. Well, again, thanks for having me. I guess no pressure if I'm the first investor, so we'll see how this goes. A little dry run, but I've spent the last 7 years of my career investing exclusively in healthcare software services and tech-enabled services. I like to jokingly say I started just a little after it was cool, but definitely before it was sexy, like it is now. So it's the market has changed a lot, as you mentioned, and we can definitely talk more about that. But I started my career at a firm called FCA Venture Partners, which was really the family office of Clayton McWhorter. For quite some time, he was a longstanding CEO and president of HCA here in Nashville. And I led deal sourcing there along with my former colleague and friend, Andrew Bolden, who you may have ran into some, and made about a dozen investments in really seed and early stage companies, focused primarily on providers. And then I joined Health Velocity Capital about 3 years ago as their first hire, which sounds great if it's a startup, but I'm one of 3 hires. So you got to keep it humble. And joined as we were launching our first fund. We've now mostly deployed that into some really interesting companies that I'm thrilled to be a part of. Yeah, I mean, that's kind of the rough overview of what brings me to where I am today.
Perfect. Thank you. And what I want to be able to do is basically if we've had any of your companies, right, which I think we've had a couple of them that have been on the podcast, also put a tag for your firm on them so that they'll be able to also go back to this episode and kind of hear from one of the people on the Health Velocity team.
Great.
It would be great if you could share with us a couple of these, and we can go with successes, which it seems like that's what society likes to hear the most, right? Some of the investments that you made, and maybe just a couple of them, and maybe a quick little blip about why, if you were a part of that deal, why you made that investment.
Yeah, for sure. So, first off, because of my partner's long tenure in the healthcare space, and a lot of the strategic relationships we have, which I can talk about, we've been fortunate to partner, I think, with some of healthcare's industry's first and market leaders like Teladoc and Change and Aspire and Omada and Livongo and Ginger and others. And in the first fund here at Health Velocity, I think probably the most standout company, at least in terms of where the market is right now and some of the big deals you've seen is MDLIVE. We recently sold that to Cigna, who's a close partner of the company for a long time, and really thrilled for MDLIVE to find a home in what is one of the largest commercial and MA plans in the country. We think for their strategy, it's a real game changer. And so not only, was it a great investment for us, but as you look at what MDLIVE means for Cigna's, broader provider strategy, it's really exciting from a member perspective to see kind of this digital first emphasis that a payer is making. I mentioned our strategic network, which drives a lot of our deal flow, a lot of our conversations, a lot of the value add we have. But about 2/3 of our network, 2/3 of our LP base, those investors which put money into our funds, are strategic. So we have payers that insure about 140 million Americans. We have providers that operate about 10 to 15% of the hospitals in the US, software and device manufacturers, selling into just about every major health system, pharmacy and PBM services that really take care of like 99% of America, and then some pharma in the mix there too. So we like to jokingly say our LP base represents the U.S. healthcare system, and so we work closely with them to understand where they want to move from an innovation perspective, and then sort of pair the work we're doing with our sourcing efforts and getting to know companies, like Block Health and others, that can help drive these companies forward, and really compete with a lot of the new digital health upstarts and companies that have really taken over. So,
thank you. Yeah, it's one of the things I'd really like to dive into with you, because I hear it all the time from entrepreneurs in the healthcare space that are at different stages, right? Myself included, right, at Block Health, is what are some of the things that you actually look for that like companies need to hit in order to be able to kind of maybe take talks more serious with a firm like yours?
Yeah, it's a great question. And if you would have asked me that 12 months ago, 18 months ago, my answer probably would have been a lot different than it is today. And if you ask me next month, it's probably going to be a little bit different. The market is changing so quickly. It's so exciting, but it's also maddening. You have to be on your toes at all times and constantly change sort of or manipulate the framework in which you're making decisions. But frequently the first thing I tell, especially when I was at FCA doing early stage stuff, frequently the first thing I would tell startups is, do you really need to raise money? It's kind of a thing to do, but it's kind of funny coming from an investor too, who makes a living off of making investments. But then I'm telling you, make sure it's what you really need. If you can continue to maintain a solid ownership stake in your own business, and you can bootstrap, and you can raise a minimal amount, then your option value increases very widely versus raising, dirty little secret to a company that raises $100 to $200 million is all of a sudden they have to sell for $1 billion plus in order to create really any meaningful shareholder value. And so, the first thing I'd say is like, know your customer audience, know how big that audience is, and determine if you really want to invest. In terms of like answering your question directly, like I said, it's different for each company, but we like to say we like businesses that we believe are at an inflection point. So a pipeline we can touch and feel, some customers that have really started to renew, and we can come in and roll up our sleeves, provide strategic capital, and take the company to the next level. So we like to see evidence of the flywheel turning. The problem now today as an investor is that some later stage firms have come earlier, and they're basically willing to do the work that we do now. And so with that, we're exploring ways to go earlier as well. Maybe look at something that where the flywheel is not quite yet turning, but we believe the market will catch up to that based on some signals we've gotten from our network. And so that's a long way of saying there's no real silver bullet, and every deal is different, every opportunity is different. And so I think if you're an entrepreneur, just continue doing what you're doing, because there's a lot of people like me out there that want to deploy some capital into exciting, innovative companies.
I love that. Yeah, no, that's a good answer too. It's and everyone I've spoken with, if I spoke with someone 6 months ago, a year ago, the answers continue to change. And I actually like when answers change. When answers don't change, it worries me about certain people. It says that they're so stuck in their ways, right? Like, but this is a crazy time that we're in, especially for healthcare. A lot of things are happening. And some cases there are early stage companies, right, that maybe you would have not taken a look at that time, but because they're at an inflection point that maybe is not the exact one that you want, but they can really take it to the next level if they're able to have certain capital injected into the company. So that makes a lot of sense.
Yeah, definitely. And customers speak louder than anything. If you've got 5 customers, your chances of raising a lot of money is 5x that if you have 1 customer.
Absolutely.
From my perspective.
Cool. I do want to make sure we dive into this for a little bit, but you wrote a white paper, and I told you it was one of the. I'm going to give Grant a quick plug here, but it is one of the best white papers I've read in a long time, and it's around this focus of what you call it, telemedicine wraparound services. Is that right?
Yeah, that's what we're calling it for now.
So I want to make sure I'll throw, I guess, a link in the show notes so that people can hopefully be able to get access to this white paper. But can you give people a little, I guess, a little snapshot of what they can expect from this white paper?
Yeah, for sure. Well, first off, thanks for the kind words. We will make the white paper available to the public at request, and so they can decide if it's a great one or not. But as a bit of a background to our white paper process, every quarter we look at a specific theme that we find interesting on the comm, after taking some signals from our strategic limited partners that say, hey, specialty pharmacies on the move, look at that. Cybersecurity and healthcare is in early innings, it's about to take off. And then really the background for telemedicine wraparound services is we took a look at some of the successes we had with Teladoc and Livongo and Ginger, and looked at what made them really successful companies, and then thought about what can make them even more successful companies that ultimately sustain their positions long term. And so if you think about where the telemedicine market is today, and you look at kind of the tools and ancillary services that make up the current brick and mortar healthcare ecosystem, those services and tools are really, the services, tools, handoffs, et cetera, are really lacking in telemedicine today. So for example, we've managed to build another silo ecosystem within healthcare. And the services that are lacking are like, lab testing, for example. If you go online and get a visit with Teladoc today and you need labs, they're going to refer you to Quest. Sometimes they can write an order, some can't. And that handoff is a little messy. At-home DME, if you need equipment, home health, or at least in telemedicine's case, we kind of call it home dispatch. Even staffing, doctors, mid-level specialists, we were talking about lactation consultants earlier. A lot of those tools, like the AMCs and the cross countries that will focus on, nurse staffing for health systems, we're looking for tools that are doing that for telemedicine companies and really ushering in like the digital first ecosystem. Credentialing, like what you're doing, remote patient monitoring, obviously growing and getting a lot of buzz right now, but still super early and unintegrated into telemedicine. And so we're looking kind of at those core assets and thinking about what we can put around it to build a more seamless experience. And then secondly, how do you connect the digital ecosystem with the brick and mortar ecosystem? Because there is harmony between the two of them. And they both need each other in a way that I think the market is not talking about. Our health system partners that we meet with on a regular basis see the threat of telemedicine steering, payers aligning with telemedicine partners to steer elsewhere. And so it's in the best interest of health systems to definitely align with some of these innovative companies, maybe around virtual primary care, to not only sustain the relationship but start new ones to then drive towards other specialty services that's core to their model. So so that's a long way of saying we want to see the two converge in a way. And what is happening now, I think that looks like a bit of an indicator that it's happening is some of the M&A you're seeing with Teladoc and Livongo merging, creating a more end-to-end chronic care and urgent care primary care solution. What Grand Rounds is doing with Doctor on Demand, I think is incredibly interesting. Cigna bringing in MDLIVE. And so I think we're going to see a ton of really interesting M&A. We already are, but it's going to continue. And one of the things I talk about in the white paper, just kind of put a bow on this, is I think we're going to usher in an age of big healthcare is what I call it. So moving from, taking sort of a page from big tech's playbook, you look at Amazon starting in books, then they add a broader e-commerce platform and AWS, et cetera. And all of a sudden they look like a big animal. I think healthcare is going to see a lot of that to where, before you know it, you have these big healthcare mega companies that are servicing the patient digitally first and then.
Yeah, and now speaking of those big companies, now you're seeing Amazon with their recent announcement, and this has been in the works for a while, right? Diving into the telehealth space with Amazon Care. Checked out the website the other day because, I think it's recent that they started putting out actual, for the first time. I don't know how new it is, but I see Amazon Care. Before it was just Amazon's and telehealth, and I didn't have a website I could actually go to. Fun fact too, for everyone listening. So when I was living in Boston, I was in the same co-working space as Haven before they announced that they were Haven. And so it was definitely interesting getting to meet all of those people, and they had to be super hush hush about what they were working on at the time. But it's
but the office is a little empty now.
Probably, absolutely.
I was really excited to see, what became of that. But, as with anything, it's hard to combine two startups, much less three, massive.
So I don't want to get controversial, but I met some of the people that were working on that. I think there's a willingness. People think that I'm going to take a outside of healthcare mindset. I'm going to come into healthcare and I'm going to use this mindset, and we're going to do exactly what we did in big tech in healthcare, and not knowing the regulations, not that you can learn all that stuff on the fly. I understand it, but there was a sense of confidence and maybe even a little arrogance, we're Amazon, Berkshire Hathaway, JP Morgan, we're massive. We're going to come in here. We're going to disrupt this. We're going to do exactly what we do in our respective spaces. And after meeting a couple of the people and kind of hearing when they were able to talk about it more, I had a feeling I knew it was going to be difficult before, but I was not high up on Haven at the time after that. I think a lot of companies get into that issue that are not from healthcare backgrounds.
Yeah, I think a lot of people were skeptical, just like you. Those who have been in healthcare for a long time that know how hard it is, both as operators and investors, that understand, it's a real mission, labor of love. It's you do it for other reasons, and I think most importantly, just the levels to healthcare, the complexity. The example I frequently use is PBM. I mean, I've spent the last 18 months trying to educate myself as much as I can on the on the pharmacy supply chain, interactions with pharma, rebates, pass-throughs, et cetera, and I feel like I've only scratched the surface. So. All that said, I believe Amazon Care will be a success. I'll state it now. I think it's gonna be really interesting. But I only think it's a net positive for the market. I think it's just going to drive more buying online. I think it's going to educate the market around online healthcare. For example, we're investors in Lemonade Health, and we believe healthcare is moving online. And while Amazon has shown to own many spaces, there's plenty of examples where they haven't. And let's not forget that healthcare is, 19% or 18% of GDP. So they're not going to own the whole thing. And so maybe I'm a bit of an optimist. Maybe I have to be a bit of an optimist. But I believe net it's going to be a pretty exciting thing for healthcare. And then, back to the white paper, I think it's just going to, as Amazon pushes in and threatens these bigger companies like Teladoc, Livongo, and some of the others we talked about, I think it's just going to drive, as much offense as it does defense.
Yeah, and we actually have a new podcast called Nick's Notes, which is hosted by the founder and former CEO of Heal, Nick Desai. And he agreed. He said pretty much the exact same thing that you said. He believes that Amazon Care will be a success. He believes it'll be good for actually providers, your average patients here in the U.S. and beyond. We'll see. Time will tell. But it's I think this will be more of a success than Haven was. Because this is more
Yeah.
in their wheelhouse than Haven was.
Definitely. Yeah, I definitely agree.
Well, I want to thank you again. Hopefully we can have you on again
Gary.
soon, but thanks for
Yeah,
coming
man,
on.
I really appreciate you having me.